We'll be going over IRS Form 8818, optional form to record redemption of Series EE and I U.S. savings bonds issued after 1989. So, a couple of things before we get into the meat of this form. As the title of the form says, this is optional. It's optional in that it is designed primarily to help taxpayers keep accurate tax records. So the IRS expects taxpayers to keep accurate tax records to reflect any items of income, credits, deductions, or in this case, exclusions of income, because most likely you would be looking to claim an exemption from income for interest earned on Treasury bonds where the proceeds were used to pay qualified higher education expenses. And that's on IRS Form 8815. So if you're filing IRS Form 8815, then this is a good to have accompaniment or companion form to help make it easier to keep records, particularly if you have a lot of paper issued bonds and the records aren't already in a Treasury direct account. So as you can see, this is an older tax form. It has not been updated since 2007. So most bonds are issued electronically now. However, these bonds are 30-year bonds, and the last of them was issued in 2011. I believe the Treasury Department went to all electronic bonds starting in 2012. So there are people that will be redeeming these bonds for quite some time. So if you don't use this form, then the IRS would expect you to keep records that reflect very similar information to the information that we're about to go over in this form. So again, you don't need to keep this form as long as your tax records are able to indicate, here are the bonds that I redeemed, here's the issue date on the bonds, here's the face value. I can demonstrate how much of the proceeds were interest, how much of it was principal. That's what the IRS is looking for if they ever ask to look at your records. So this is a very easy way to just keep all of that without having to think about what information requirements you have. So let's start at the top. Again, all of these form fields are optional. So as long as your paperwork's not floating around, you don't need to put in your name and the date that you cash these bonds in, especially if you did this over the course of a year. But in part one, if you redeemed any paper series EE bonds, again, the requirement is that they must be after 1989. So 1990 for paper series bonds through 2011. Any bonds that were issued during that time frame, you would record them here. So first two lines, I put in an example. Most of the serial numbers, they're generally 10 character alphanumeric serial numbers. So whatever the serial number of your bond is. And as a helpful tip, even if you don't use this form, you should at least keep copies of the serial numbers of all of your bonds, just in case if you had paper bonds and they got lost or destroyed, you can still look up a savings bond, a paper savings bond based on the serial number. And if you can demonstrate that you bought the bond, that you are the person that's registered, then you would still get credit for having that bond, even if it was destroyed in a fire, for example. So serial number, the issue date, again, after 1989, and then the face value. And there's enough space in part one, line one, for up to 17 different bond entries. You can use additional sheets if you need to. Calculation is pretty straightforward. You're going to add up all of these column C amounts. So let's say if column C overflows and you've actually got 20 $1,000 bonds, you would calculate everything in here plus whatever the corresponding amounts are on the other forms. So let's just say that we've got $2,000 worth of bonds. These bonds happen to be sold at face value, but really they have a face value, but they're actually sold to you at half of that. So if you had $1,000 bond, you paid $500 for that bond, and then whenever you redeem it, they will do the final calculation based on prevailing interest rates and what was applied to your bond. So generally speaking, $1,000, that is presumed to be the cost of your bonds. Now the $2,000, that doesn't mean that's your proceeds. We'll get to that in a moment. Your proceeds don't have anything to do with the face value because the proceeds are calculated based on the interest rates that are applied. Interest is compounded, I believe, daily, and the interest rates do change over the life of the bond. So all of this is done electronically now, generally through Treasury Direct, but even paper bonds, Treasury Direct does keep records by serial number of a bond, and the calculations are automated. So if someone were to look up this serial number, then they would be able to tell you what the actual redemption value is of that bond on any given day based on the interest rates that have already been applied to it. In part 2, we're going to go over Series I bonds and electronic Series EE bonds. So Series I bonds, they were popular because they have a flat interest rate, and then they also have an inflation component that's adjusted, I believe, quarterly. So in times of low inflation, a bond might be issued and it's paying next to no interest, but then as interest rates rise, the bond payment coupon rate is updated on a quarterly basis. So it is an inflation hedge. And so Series I bonds, and of course any electronic Series EE bonds, all of these, the interest is allowed to be used to offset qualified higher education expenses. So, put in the serial number in column A. The issue date, we'll just put in, let's see, something like that. And then the face value here is $1,000. So you'll add all the column C amounts of line 4, but unlike in part 1, you don't need to multiply it by 50%. The face value, that's the cost of your bonds that you cashed in. So let's just say that was $1,000. Now the total redemption proceeds from part 1 and part 2, that's not the same as the face value. Excuse me. That would be whatever is redeemed. You can still redeem bonds at a bank teller, at least paper bonds. If you went through Treasury Direct to redeem your bonds, you'll get the proceeds amount through your transaction ledger on Treasury Direct. But let's just say that this we had a total of 3 bonds, 3 $1,000 bonds. Let's just say that by the time we redeemed them, we had $3,500 total redemption proceeds. Now, the cost of the bonds actually was the sum of line 5 and line 3, which is $2,000. And then if we subtract line 7 from line 6, we get $1,500. So this is the total interest that was listed on the bonds in parts 1 and 2. This is the amount that's subject to tax. If you reported it on your tax return, this would be the amount that you would be seeking to exclude based on qualified higher education expenses. So the $2,000, this part of your redemption is not taxable. It's a return of principal. Since you bought these bonds with after-tax money, presumably, then these would not be considered taxable. The $2,000 is a return of your principal. It's not taxable income. So really the primary figure at stake here is $1,500. However, excuse me, this is how you would keep accurate records if the IRS ever tried to hold you accountable for anything above and beyond the interest amount. So that's all we have for this tax form. Pardon me. I'm just getting over a cold. So that's all we have for this tax form. We will put a link in the show notes to the corresponding article that walks through this form step by step. We'll also put links in the show notes to other relevant resources we've created on other relevant tax forms, such as 8815. That's the form that you would use to claim the exclusion. We'll also put in any tax forms that you might expect to that are normally associated with higher education expenses, since people that are interested in this often are interested in things like the education credits or tuition statements, things of that nature. So we will put links to resources we've created on other education related forums in our show notes. So if you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel. And as always, if you have any questions or comments, or if there's another topic that you'd like to see in an upcoming video, please hit me up in the comments section. Thank you very much and have a great day.